Tuesday, December 19th, market analysis, Stan Ehrlich. Yeah, we start the Santa Claus Rally buying tomorrow morning, Wednesday, and I'll get to those details. And the details are available in a spreadsheet and graphics, as well as some text. If you just send me a request at info, I-N-F-O, at ersignals.com. That's info at ersignals.com. Okay, we're starting out with the stock market indexes, the E-mini, new high across the board for everything. I can't believe this market is being this strong, this fast, and overbought still for a very, very extended period of time. Very unusual. Normally, it's only for a few days to maybe a week or two at the very most. But you can never make the market do what you want it to do. You always have to move with it. So I have to continue to expect a downside correction. We're running right into the beginning of the Santa Claus Rally, so it's becoming a little dicey at the moment. We'll see how this pans out in the next couple of weeks. We get out of our Santa Claus Rally purchases, which is going to be tomorrow, Thursday, and Friday. We get out on the 2nd, 3rd, and 4th of January, which is Tuesday, Wednesday, and Thursday of about 2 weeks and a couple of days from now. So, and I'm telling you the exact time of day in the material if you just request it, info at ersignals.com. Now, this is the E-mini March futures contract and new high, possible new high close again. There's support below the market. There's a variety of reasons why I should expect some sort of retracement or a correction ASAP, immediately, but it's not happening. I want it to get below yesterday's lows. That will generate a red bearish engulfing signal similar to what we have had back on July 27th of this year, and probably produce a nice correction. Nowhere near as big as we had it all the way down to the October lows of this year from July. In this case, maybe we'll get down to 4,600. Another spot to look for it to turn around and start to move back up again would be 4,650. But something in that ballpark looks very reasonable. Next chart is the spider SPY, which is the S&P 500 again, but this is the ETF. We've got new highs again, very overbought. We have support below the market. We have every reason to believe that the market is about to have some sort of retracement, but it just hasn't started yet. And the spider 1-minute chart shows us that the market opened slightly higher and climbed to a high this morning, pulled back a little bit, and has rallied relatively close to that high. So there's no significant indication at this moment that we're getting a signal in progress. Next chart, DIA. Pretty much it's a broken record here. Overbought like crazy. Every reason to believe it should pull back to support areas, not starting. Next chart, Russell 2000. I have to tell you that the Russell is now challenging the highest high since August of 22. That's how high we've gotten, and it's above all of the other highs since then. There's a gap to close, another reason for it to pull back. There's a lot of support under the market at this point. Another reason to believe it's not going to go down too far or for very long in all of the indexes and turn back up again. It's not like I'm bearish. I'm not bearish. I'm looking for a technical correction in a bull market. Next, QQQ, same story. There is a very, very tiny gap to close from about a week ago, but that is too close probably. And I'm more or less looking for 390, maybe a little lower than that, but it's not happening yet. NASDAQ futures contract, March, same story. And the futures have a gap, which is kind of unusual. you don't see that many gaps in the futures when they are liquid and the lead contract, So let's go to futures. Now, from a different perspective, the E-mini, this is the continuation contract. And in this group of charts, I use continuation contracts always. So the prices are not exactly the same, but the way the market's moving is the same. And the percentages and the chart formations and things like that are 99% the same. It's just that the gaps sometimes are a little tiny bit different and the prices are a little different. Anyway, overbought, expecting a correction. Next chart, NASDAQ futures, same thing. Next chart, bonds. Now they're stalling out here in the last few days. If we can get bonds to have a downside correction, I think that's about to happen also, then it's going to be helping the indexes pull back down a little bit again. And I'm not bearish on bonds at all. I'm still long-term bullish, and I've been saying that essentially before the bottom occurred, which is a bullish ER green buy signal, smack dab on the bottom of the bond market. And yes, our strategy, which is 100% automated ER1 and ER2s, we generally call the ER signals. They got long, great. Took a really big, nice trade out of this bond market, got out a few days ago, stopped out. 10-year notes, we're still long, still doing great, almost a new high ground, but I do expect a correction. So I think maybe we're going to get stopped out of this soon, but not yet. And I'm very bullish long-term on interest rate futures. But again, all of the charts I've just talked about, every one of them, the indexes and the interest rate futures should have looked like they're about to have a minor downside correction for a few days to maybe even a week or so. But I don't want more than that because of the Santa Claus Rally history. Next, crude oil. Support stopped the decline in oversold conditions at the bottom. Too bad we didn't get a signal. So it's rallied some. We're starting to get between a rock and a hard spot a bit here. We could come up to 80 and a third. That would be no surprise, and not all that far away either. And that's about the best I can say for crude. No signals, not a heck of a lot to work with besides, the usual. Next, natural gas. Obviously, bear trend, bear market, and oversold conditions allowed for a bounce. Maybe it's over already. Look for support, the recent lows to possibly hold. This market got very oversold for quite a while and should have a rally better than we had for the high of yesterday. So maybe I'm neutral to friendly short term, but no specific recommendations like specific signals. We had a bad signal here. That was a buy signal. Green is buy, red is sell. And that didn't work. But that one was on top of the market. Worked great. That worked very nice. That worked very adequately, not super. That worked, maybe. That one worked great. That buy signal worked very good. Next chart, heating oil. Bounced off a little support in oversold conditions, and we're still bouncing. So I think we're going to get pretty easily now to the top of the resistance area at 2.77. We're right now dealing with this bear trend line. It could stop here at the bear trend line. I don't know if we have today's high is 0.7306 and yesterday was 0.7329. So we're not higher today than yesterday's high. Therefore, it's an inside trading range or doji with a current quote higher on the day. It doesn't really mean too much. The most important thing, I think, is the resistance area on the trend line we're pushing against. So let's see if it can turn down again. Next, gold. We got a whopping big top. That does not, as I said when it happened, guarantee that it's going to be a great big bear move. Today, we got a little rally going here, challenging the highest high since the bear reversal. And I think it has a good chance of stopping the rally and turning back down. I got to believe that sell signal probably has more of a downside potential than what we have had so far. We got the bottom of the market on that green. That's a bad signal. You lost a little money on that. That's a great one. You made some very good money on that. Great sell signal, great sell signal. That's a great buy signal. That was not, and that was not. And a fantastic sell signal back over here, February of this year. Next chart is soybeans. Silver. We have bad data in silver. The trading range from yesterday has not been adjusted. I called them up, told them they got bad data, and they haven't fixed it yet. So this green bar is erroneous. It's not correct. All we have is probably a little bit higher levels than yesterday's close. So I have to wait until tomorrow to fill you in on this one. I apologize, but TradeStation, please fix that for me like innumerable times in the last many decades that I have offered some help about bad data. Resistance stopped the rally in platinum. We're coming up again to the same resistance area. You poke at resistance too often and it's going to go through it. This is not necessarily too often, 3 or 4 days. So I'm looking for it to stop rallying and start to turn down again. You've got basically a pretty good bear trend here. That buy signal was fantastic. That one's excellent. That one was excellent. That sell signal was excellent. That one was okay. There's a bad one. That's great. That green one, that's the red one's great. That's good, 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 good. I think I only had one bad one. Well, anyway, next chart. High-grade copper. At resistance, almost. It's above a trend line. I realize that. Trend lines are not one of my favorite tools, but I appreciate them and respect them. I've drawn, I don't know, thousands. So when they're particularly profound appearance, I pay attention, and they work fairly well. This one is being broken now for the last 2 or 3 days. On a closing basis, and even the lows of the days are sitting at or on top of, above that trend line. So new highs would just push it a little bit more higher and into resistance. Let's see what happens with high-grade copper. You're basically between the rock and a hard spot. Next, soybeans. We caught the bottom with a great green bullish engulfing smack at the bottom. ER3 got picked up the next trading day. And right now we're dropping off so that our trade is kind of flat, maybe even a hair of a loss, depending upon you're talking ER3 position or ER1 position. ER1 is a little loss. ER3 is a little profit. Remember, the green dots are ER3, so we bought it right there. 1305 and change. And we're 12 at the moment, 1312. So I'm bullish and not cooperating today. Yesterday looked pretty good, but it just flip-flopped. Let's see if these lows hold. That would be where our stop is more likely than not at this point, just below these lows. Next, bean oil. Going sideways still. We had a fantastic trade in soybean oil. The second high of a double top was a bearish engulfing and an ER sell signal. Rode it all the way down to here. Got out. Every day on YouTube, I was plotting this trade for you. Now we're between a very wide rock and a hard spot. So far, support is held, sort of, not great, but we're above it. And we could easily bounce all the way back up to 58.40 or so. Next, soybean meal. Support's trying to hold. We're still in support, waiting for a signal. We're not very close to oversold or overbought one way or the other. So I have to wait a little longer on this as well. Corn, we got the bottom. That was on November 29th. We got stopped out a couple of days ago with a small profit. Probably could have had more, definitely could have had more. But what do you do with the trading system? I'll tell you. You either follow it blindly because you trust the track record, you've watched it for a while, and you like what it's doing, and you believe it can continue to do what it's done. Or you use it as a tool to guide you, hopefully in the right direction, and you make some, not necessarily all, of your entry and or exit signals on your own. But you use the tool to guide you to when to buy and sell in a general sense. Next chart, wheat. We haven't had a signal for quite a while. Bear trend to say the least. You know that we got a sell signal, incredibly enough, on the exact high day, March 8th of 22, when the war began. It screamed higher at the beginning of the war, and then it's been going south ever since. Next. Live cattle. 2 days ago, Friday, we had a buy signal. We almost got long in ER3 today. We have today and tomorrow to do so. Touching the green dot would do the trick. I'm bullish because of the signal on Friday of last week. And it bounced out of support and oversold conditions. So I'm liking what I'm looking at, but remember I've been talking about the stair-stepping down situation. The market topped out on an ER sell signal, fantastic. There's another one smack dab on top. There's another one smack dab on top. Way over here, there's another one on a minor high, and that was a minor high. So this green one, why not? Looks good, looking for higher levels. But let me show you this. Top, dropped off, rallied, new lows. The rally was back up to previous lows. Dropped off to oversold condition. The rally was back up to previous lows. Resistance. Dropped off to oversold conditions again. Rally was back up to previous lows. Resistance. And it did it again. And it did it again. And we're in the midst of that again. So now we have two highs. The second one is higher than the previous, and a buy signal. So we're breaking the rhythm or the continuing pattern, and it is after support was tested, and it was pretty significant support, and that makes a big difference. So I'm now friendly to cattle. I would not be surprised to see it move up to 176 and maybe even 82. Next chart. Hogs. Oversold conditions, bounced a few days, came down to the same levels, it held. We made a minor new high yesterday, but we're backing up a little bit. Support is working so far, but resistance is always also working so far. So I have to say again, between the rock and a hard spot, and we will be breaking out of this sooner or later, and maybe we'll have a good signal beforehand. We got a low right here, a green buy signal, and had a really good trade for about a week and a half. Next, orange juice. Well, I've been talking about this head and shoulder top for a few weeks now, every day. My last shoulder high was only 1 day earlier than I had forecasted, a little bit lower price than I had forecasted, which is approximately the middle of the circle. But the neckline is giving us a little problem. Normally, when you make your last shoulder high and come down toward the neckline, it's usually broken and it breaks right through it and goes all the way down to its minimum downside objective, which is 287.38 if you want to get very accurate. 287.66 or whatever the heck it is. Call it 287. And today, we make a minor new low for a couple of days, but it's trying desperately to hold above or below this, above this line, the neckline. So it's breaking it and then bouncing off of that area, and it won't so far close decisively below the neckline. If we drop below today's low and stay that way on a closing basis, or go even lower than that, you got to break out. You got to break out, but not yet. Borderline, right smack dab at the line. Cocoa, new high close looks very plausible. Almost a new high ground now. What can I say? This is just going up and up and up. Next. sharp rally in coffee and overbought conditions again in a rather broad area of previous trading range. That would be resistance. So I'm looking for it to have a downside correction very soon because of the overbought conditions and the very broad resistance area that I'll probably draw in some resistance zones in the next couple of days. A little hard to get a handle on where this starts and stops, but that's a good stopping place right in there. 219, call it 220 flat. Next chart, sugar the sweet, and we're looking at oversold conditions with the possibility of a bottom starting. New lows, but a higher current quote from yesterday's close and oversold conditions that I mentioned. If we can rally enough, we'll have a green bullish engulfing if we can get over yesterday's highs. Watch for that to happen. We might be starting a rally here. Next, cotton, the rag, supports holding at slightly higher levels as time has passed. I think we're probably trying, well, not bottoming out. Can't really get a good handle on this yet. But if we do turn around at these levels, it'll be no surprise. I need to get above these highs in order to forecast something even more bullish, which would be up to this major resistance area. But it hasn't happened yet. Back to the E-mini for a moment. We're still near the highs and last, still up a little less than 2 points on the spider, 191, and 190 higher in the DIA, but they're not, they're moving, they're twitching, but it's very quiet at the moment. Okay, and up just 1 point on the Qs. Let's look at the fine-tuned charts real fast before I let you go. And here are the 1 minute chart on the spider. So starting to see quotes at 473.50 would raise my eyebrow. Maybe both of them. You got a little double top, you got a couple of shoulders, you got a neckline that's almost flat and tested already. That's very interesting. Not quite as symmetrical as you would expect, but most of the body parts are there. Not quite as good looking in the DIA, but significant as to whether it can get below the lows of the last couple of hours. And the QQQs, I got to say the same thing. Pattern doesn't look good. You guys have a great day. Profitable trading to you. Tomorrow morning, oops, I'm sorry, I'm not ending yet. The Santa Claus Rally. You want to buy it at 7:05 tomorrow morning, California time, and Thursday morning and Friday morning. The problem with the Santa Claus Rally traditionally is that nobody has ever mentioned any protective sell stops, stop loss orders. You just buy it before Christmas and sell it in January, early January. We have pinpointed it to the minute, and we definitely encourage, it's a necessity in my opinion, that you figure out where you want to put your risk factor, your sell stops, and apply them. Never, ever, ever get into a trade without a protective stop, in my opinion. So that's the first 3 entries. 7:05 California time, tomorrow, Thursday, and Friday on the spider or another equivalent stock market indexes that you like that moves up and down like the spider, and there's a few of them. And that's it. And I'll tell you the detail about getting out. If you want that information, info@ersignals.com. Have a great day.